guys? Welcome back to the Capital Mindset Show. We are your hosts with the most, Austin and Fabio. I know I took a little pause today, but we are your hosts, Austin and Fabio, and today we're going to be talking about Stone, ticker symbol STNE. It's a Brazilian company. We had to do some little bit of shenanigans accounting for IFRS from GAAP. So today we're going to kind of be going over that a little bit as well. And now I don't know if you guys were aware. I myself am not entirely too sure how to calculate these cash flows from IFRS. And today I'm going to be kind of asking that, as well as we're going to dive into the business, who the customers are, as well as what the financial standing of the company is, as well as plugging it into our discounted cash flow analysis. So without further ado, let's do this. What are we looking at here today?
All right, first things first, let's take a quick glance at the performance. So this is, again, stock request. We have a bunch to get through. But this is another one. This is one of the international stocks. Look at that, headquarters in Cayman Islands. We're off to a great start. All right. Anyways,
I know what that usually means. Yeah. Yep.
All right. So look at that. They're up today. They've been performing amazing. This has been an amazing performer, except when we look at the 5-year. All right. Anyway. More seriously, what this company is, you can kind of think of it as like a square. The best comparison I can make is like a square of Brazil.
Okay, so for our audience members who don't know what Square is, could you just kind of summarize that a little bit and maybe one or two
payment processor for merchants? Okay. So this actually competes with a longtime holding of mine in some regards, Mercado Libre. So ticker symbol MELI, Meli. Okay, so this company kind of competes, not really, but kind of. I don't own Meli anymore, by the way, but it was an investment I had a little bit ago. All right, anyway, but the point is, Stone, think of it like Square. It's basically it does most of its operations in Brazil. Very little tiny baby version of Square. So in my personal humble opinion, you're kind of getting the second-rate version of Square. But
you're getting the discount version.
Yeah, you are. But so who's invested in this? You told me you were telling me that there's like some
I read in one of our comments that actually, and I need to pull this up because I don't want to put words in his mouth here. But all right,
well, you're finding that. I'll talk about how it's been not doing too well and some of my thoughts as to why that is. So we can see that.
Okay.
It's down about 82%. Yep.
He indicated in his comment that both Buffett and Cathie Wood have this in their portfolios, but I'm going to check and verify that.
So. All right. Well, Berkshire Hathaway may have it in its portfolio, but I don't think it was Buffett. Okay. Yeah. Highly doubt it was Buffett. It's probably either Ted and Todd or some other form. But doubt it was Buffett. Cathie Wood, this is totally up her alley. I totally see this as something she'd be buying. You can verify that for us, Austin, and the allocation she might have to Stone. But anyway, for the most part, this is going to appeal to people who are looking for that growth stock. It's a $5 billion market cap. So the implication there is it has so much potential going forward to grow into its valuation of all the potential it has before it. This is a Brazilian company. So I can say this because my wife's Brazilian. So I have certain rights to say that. But I would be very careful to invest in any Brazilian company. Okay, I'm just going to say it bluntly. A variety of reasons. Management team or the culture in Brazil is not to actually, it's management team more often than not will try to enrich themselves.
And something that is probably also from Latin America as well. Is this typically a thing that we tend to see with Latin American companies? And
it's something you have to be more careful with, that American investors can be quite naive about.
Mm-hmm.
All right. And I'm just going to say it. Cathie Wood is potentially falling in that bucket. Yeah, she's quite naive in that regards. I know, bold claim. Yes, she's quite naive. And that's why I say I doubt Buffett was the one who made the investment. I really do believe it was one of the more And it's not a bad thing to be naive. It's innocence, right? They're innocent. They think that every market is just like their market, and everything can be just trusted, right? So that's just a preliminary thought that goes through my head, by the way, that knowing that it is a Brazilian company, well, I'm going to be a lot more cautious. I need to know a lot more about the management right off the bat. And I actually implore our viewers to think about that when they're investing abroad. Try to understand that their market may not be like your market. Their business culture may not be like your business culture. Cultures can be different, right? So, and then you have to understand those differences, right? And then invest accordingly. So there are going to be a tremendous amount of Brazilian companies who are actually going to do good by you, but there's going to be perhaps more frequent than normal, than what you're maybe used to, of companies that aren't going to do right by you. And the management team may do things that will be not accretive to the value, to the long-term value. And this again will be maybe more frequent than what you're used to.
So now my question too is also, didn't we
still
see something
happens
like this
in the United
happen
States.
in Kraft Heinz, right, with 3G Capital?
Oh gosh, you're getting me into that.
Yes, I am. And I'm
I
going to
wouldn't.
siphon all of it out of you.
All
I'm going to
right.
get all of it out of you.
So what Austin's alluding to is, in private conversation, I've mentioned him. I wouldn't touch anything 3G Capital has ever touched. 3G Capital is a Brazilian investment firm that was in league with Warren Buffett for a while, until Buffett explicitly stated he's not going to do any more investments with them. And you want me to be blunt about it, Austin?
Yes.
It's frankly because they're trash.
I love it.
Yeah. 3G Capital does not do the right decisions, right? And they're pretty big, but they're a Brazilian investment firm that seemingly just, gets their fingers in things and messes things up. So I wouldn't really touch anything they invest in. In fact, I actually look for what they invest in and avoid it. So for example, Kraft Heinz was one. If they exit Kraft Heinz, or if they take a passive role in Kraft Heinz, I'll think about getting or looking at it. And I think Anheuser-Busch is another one that they're involved in. I did a video, I think, on Anheuser-Busch a while back. But okay, going forward, what does this company do? Or did you find out what her allocation is, Kathy Wood?
I've been looking, but I also found out that 3G Capital, they own a part of Burger King. If you
the worst run of the gosh, you see, it's like, I mean, what more can I say? Yeah, they own QSR. It's QSR. They own QSR stock.
BKC is Burger King.
I think they might have spun it off or something. Yeah. Okay. And by the way, Burger King is not as good as McDonald's down in Brazil. You can ask your fellow Brazilians that you may know in your inner circle, ask them in Brazil what's more popular. Guarantee it's McDonald's. All right. Anyway, this is
she
something.
Actually has a small allocation in her portfolio in
okay.
In the ARK ETF, it's a small allocation of StoneCo LTD.
Good on her. She may have sold it because it's probably her index fund is probably market cap weighted. So by it going down, she has to sell some. But regardless, it has come down about 80% since its all-time high. So this is something you need to be aware of. Be very cautious about this. I wish I could zoom in quickly. Let me see if I can actually. Zoom in for everyone. All right. So is that better? Can you see that better, Austin?
Yes.
All right. So take a look at what the heck's going on. So the United States to the real, the Brazilian real, the real is absolutely taking a dump. Okay. So when you're investing in foreign countries, you have to take into account in currency risk, because if you're maybe most of our viewers are American or European. If you're European, you're dealing in euros. So I'll go ahead and change this to the euro, so we can take a look at that too.
It's going to be an E.
Yeah, there we go.
There you go.
All right, so taking a look here, it's about the same story because the euro and the dollar not too far off. It's about 64% decline since its highs. But basically, you're investing in a very, it's not a developed nation yet. It might be one day, hopefully. And economically, you're going to suffer alongside the country if things go bad, because the amount or the currency is denominated in reals. Okay. And they actually say that in their 10K. So they're covered on that. You can't sue them for that. And so if they ever were to redistribute capital back to you, it will be in reals, which is unfortunate because the real kind of sucks right now. And there's a lot of reasons for why the real is so weak. And I think going forward, because I do think Lula is going to win, the real will weaken further. Okay, so, and that's not to say the current administration in Brazil has done it any favors, but then that administration would perhaps wreak a little bit more havoc on the real. And then, so in that case, I tend to say, before we continue, but I will still continue for everyone, I'm avoiding Brazilian companies or companies that solely produce income in Brazil. Not to say that if a company makes money in Brazil, avoid it. No, it's just if they solely produce income in Brazil, I would avoid being a foreign investor. If I was a Brazilian investor, might change the story because my income would be denominated in reals. If I was a Brazilian investor, though, I'd probably seek foreign investment elsewhere. Like I'd invest in Europe or United States, Canada, Asia, but not really domestically. All right. That being said, again, remember, Europeans and Americans and Canadians and Asians, to some degree, depending on what Asian country you're in, you got to understand that you guys are blessed because your markets are very healthy. They're more developed, so you have more access to actually deploy capital into your local markets and actually stand to benefit. In certain countries like Brazil, things are a little more difficult, right? Still doable, but more difficult. All right. Now, you were discussing, Austin, with our audience a little bit about the differences between the calculations in free cash flow on a GAAP basis and an IFRS basis. I made a video, and it was on ASOS, right? And I was discussing in that video how to calculate IFRS free cash flow. And I'll go over that again here for our entire audience. All right. So again, we'll take a look here. It's fairly straightforward. Well, it's actually not as straightforward as GAAP, but it's not too hard. So you take net cash provided by operating activities. You take this number, right? And you're going to subtract two numbers down here. You're going to subtract purchase of property and equipment, purchase and development of intangible assets. So you're going to subtract both of those numbers. And then you're going to subtract one more number that you hope they should be sharing, but sometimes it's harder to find. They might call it something different. Payment of leases. So
now, that's interesting.
Yes.
But that also,
no, it makes sense because they have to pay the lease. So they're, whatever rent, that's part of their operations, right?
Exactly.
So
and that's,
you subtract those and then you got free cash flow. Fairly straightforward. All right. So this is for 2020, but, this is for 2021. So Austin, can you help us out with actually, no, I already calculated this. You don't need to do the math. All right. And then this was just in case I want to show you guys the 10K, but I think I covered it enough. You guys know how to calculate it. Was I a good teacher there?
Yes, you were.
Do you know how to calculate it now?
I do.
All right, perfect. That's how you calculate free cash flow for IFRS. Now, going into, well, before we go into it, what are your thoughts on this Brazilian company? And then we'll get into the model.
I don't really entirely know enough about the company itself right now. I know about the macro that is your opinion of investing in Brazil itself, as well as some track record with 3G Capital and et cetera, so forth. But I don't entirely understand the business of StoneCo Ltd itself. I don't understand who manages the business. That's kind of what I want to explore now.
All of those are very dangerous aspects because you need to know that, especially from if you're heeding my warning about investing in Brazil. You need to know those things. That does not mean, I want to be very clear for everyone, that does not mean you cannot invest in Brazil and be successful. No, you have to be more careful. But yes.
Exactly. And the other thing is, I kind of want to explore this now. I kind of want to explore what is the business like, what is so captivating about StoneCo Ltd? What are they doing? How are they making moves in the Brazilian market? Everything, like, why am I seeing such sentiment towards this specific company. We know it's cheap right now. It's at some pretty incredible lows in the price performance itself. What are maybe some factors contributing
Look,
to
if
that, et cetera, and so
if I'm
forth?
being blunt, if I'm being very
Yes.
blunt,
Yes.
it's just the discount Square. It's a cheaper version of Mercado Libre. So um, I would say it's an inferior business to all of those, but that's the excitement behind it. They're growing fast from a small number, and then there's a lot of potential and hype behind it. You know, classic Kathy Wood. I'm sorry, I can't be too mean. But Stone's basically that it is exciting. Okay, let me be honest. It is exciting because if you think about it and you say, okay, this will become as big as Square, right? That's probably the hypothesis some people have. Right. If you have the hypothesis, of course it's exciting because it's a $5 billion company. Square's close to 100 billion at one point, and at one point it was like 200 billion. All right. If it gets there, I'm going to make a ton of money. I missed out on the Square boat, right? And now I want to, you know, catch the new one, but this one's in Brazil. So not coming to terms with the fact that it is in Brazil, which changes the game, especially if you are a foreign investor. Again, as we discussed earlier in this video, if you're earning in dollars or euros or pounds or Canadian dollars or Australian dollars or Chinese yuan, or no, I just actually it's actually renminbi, Chinese renminbi, right? Or the Japanese yen. Yeah, by the way, it's not yuan. People keep calling it yuan, but it's renminbi. I always have to correct myself mentally. Anyway, but that's not the point. If you're earning in another currency, you need to be careful because you need to account for the Brazilian real and the value of the Brazilian real over time. And it's not so good. And it's probably not going to get any better. I know Brazilians have a lot of hope. Like my wife has always a ton of hope for Brazil. Of course, she had us. And there's a statement about Brazilians. Brazilians are always very hopeful about their country. In fact, I might have upset a couple of Brazilians, but I don't do it out of despiseness for Brazil. No animosity. There's no animosity for Brazil. All right. Fact.
Now actually, I kind of want to ask.
You have a question.
I was waiting for the perfect moment for you to finally finish your point there.
What are you trying to say?
I'm sure the audience is wondering, and I'm going to be blunt. What is your opinion on Kathy Wood? Be completely honest. Completely honest.
I wasn't expecting that.
I know. It's all right. You can be completely blunt and honest.
I think she's an opportunist, and I applaud her for taking her business opportunity.
Fabio.
And, you know, coming into relevance in opportune moments, as she did earlier in her career. She knows how to sell a stock. She knows.
Are you being diplomatic with me again?
I mean, I don't want to be mean, dude.
All right. Anyways, let's get back to Stone Co.
Look, she has a lot of money, therefore she's awesome.
Okay, well, perfect. You've heard it.
Excellent, flawless logic. All right. Anyway, so Stone, yeah, those are some thoughts about Stone. That's why people are probably investing in Stone. But I don't want to say that, you know, anyone is foolish for investing in Stone. Of course, it's a very exciting. But I'm trying to highlight some key parts that you want to be very careful of. And then take this and then extrapolate from that and then take that to any market you're looking at. Try to understand the business culture, try to understand the political risk associated with that, and understand that you don't live there. So you're not maybe as familiar with those risks. So either you're going to have to do a ton more research, right? So I already advocate for a lot of research in your domestic country, right? You need to do a lot of research. If you're going to invest in a foreign, and this is our whole spiel with the VIEs, right? No one does the research. So if you're going to invest in a foreign market, you got to do even more research. It's like it's an exponential amount of research, okay? Because I just discussed, you have to be even more careful. And I'm kind of giving you like the heads up, the propelled or guidance on the research. You got to do a ton more research on the management team. You got to do a ton more research on what are your legal protections. Spoiler alert, there aren't many for this one. That's what the Cayman Islands thing was all about that I kind of pointed out. So I'm just bringing it forward here. There's barely any protections for you as the investor. It's not a VIE per se at all like that. It's just because it's in the Cayman Islands, you inherently don't have many rights. Because remember when we discussed the VIEs, not to ramble too much, but we discussed that when we discussed the VIEs, your ownership would only be protected of the contract in the different jurisdictions. Well, the Cayman Islands, you're not going to even win there. So they're protected. The end entity is protected in so many different levels. Well, in this case, Stone Capital is already protected just from the Cayman Islands. Boom. And they tell you that in the 10K. They literally say to you, hey, we're governed under Cayman Islands law, and that might screw you. All right. So they're being honest, at least. All right. Now going into the model, I think it's about time we get in there. Don't you think?
I would agree. I would agree with that.
So STNE. Okay, there we go. All right, so ignore us.
Wow.
The analysts say it's a buy with a buy price, or sorry, not buy price, 1 year price target of 43.17, implying 163.6% upside. The analysts know a lot. They're infallible.
Infallible.
Austin and I,
air.
Austin and I are really, really, really dumb. So that being said, let's actually take a look and see how cheap they are. Yes, they're extraordinarily cheap. So wait, hold on. Did I input the proper? Oh, yeah, I did not. Actually, I'll walk everyone through this. So this number is completely incorrect. So this number actually should be 0.51744203. There we go. Sorry to make everyone so excited. Oh gosh.
What the? I knew something like that was gonna happen.
No, that was not intentional. I didn't mean to do that for dramatic effect. I had to make the adjustment because the quick conversion to Brazilian reais. So that was actually, it's 517,000 US dollars. Sorry. So let's take a look at the growth. Let's say they grow 50% per year. Okay. Let's say 100% per year.
What about 1,000% per year?
There's just one check here. I actually got to do this check here in thousands. And then I apologize for everyone for wasting your time. And absolutely. All right. So the adjustment actually needs to be by, okay, so it's actually not that bad. We got to go back and make the adjustment to 517. Yes, 517.442, not point, sorry, 03. All right, if we're trying to include everything. All right, it's not that bad. Okay, now looking here, looks extraordinarily cheap. So now we should be at the proper amount because it should be about 517 million because it was a 2.9 billion reais. And then that equates to about 517 million US dollars in free cash flow for the business. Now, let's take a look at these growth rates. So 50% growth rate for 10 whole years is going to be, I'd say, now looking at those numbers, that's going to be the high end. All right. So then from here, let's say a middle point, they slow down to 25%. All right. So again, as you can see, this company is extraordinarily cheap. That's what I wanted to say. And I said this off camera, I believe to you. This company is extraordinarily cheap. And that's why immediately when I saw it was at 2 cents, I was like, all right, something happened wrong. So that's why I went back and checked. And you can kind of see how these currency conversions, I could have automated that, but whatever, didn't do it. So even at 25%, it's so then let's go lower. Let's say, can it be 15% actually? even at 15%, very cheap. All right, 10%, very cheap. Okay, then let's assume the dilution rate continues, because I do think it will. 8%. Okay, and let's do that. I'd say we can do 30%. All right, so now here's the caveat. We're only discounting it at 12%. 12% is definitely not enough, in my opinion, for something like this, but we'll get back to that.
Because you also have to take into account macroeconomic risk in this instance.
Yep.
As well.
So then there's this risk over here, right? So this
Yeah.
risk, there's actually some risks here. This company, despite using or diluting you, is actually using a decent amount of debt. The dilution accretion is not good.
Oh boy.
Remember what I told you about that?
I do remember what you told me about that. And yeah, that's not good. Negative indicator equals bad.
Yeah, so not too good there. But remember, you could make the argument, young company, also in the earlier years that the model has, it's importing, it's been negative. So, that number could be off. Just so everyone knows, I want to be fair and state that it may not be purely accurate because the company doesn't have enough history of earnings, right? Of cash flows. Right. So it could have a ton of negative cash flows, and that's distorting the number. All right. And then the WACC, it's pretty expensive WACC. And then I want to take a look at this beta. Okay, it's fine. Countries in Brazil, remember, headquartered in the Cayman Islands, though. Okay. This is the man I would definitely look up. Austin, you want to do the honors? And then I'll take our audience through the key ratios. So taking a look over here, liquidity ratios look fine. What doesn't look too fine is, well, actually, they've improved this. Look at that. They've improved, credit where credit's due. Long-term debt ratio, credit where credit's due. They're improving across the board on these. Long-term debt to capital, improving. So everything's improving there. All right. So gross profit margins have been declining, or we could call that normalization. Okay, because maybe they were extraordinarily high. I would not really trust these earlier numbers too much because they weren't really in operations. They were very early on. And then going forward, we see negative, and then operating margins are still pretty high. All right, let's take a look over here. All right, so earnings quality, good, very bad, and then back to good. All right, so that may be indicative of what is to come. And then this was probably the lagging effect. All right, so book value, we don't care, and we don't care about the inventory ratios. So that was as quick as possible so we can focus on the valuation part. Let's take a look at the discount rate that I think this would need. And at 20%, we have a decent margin of safety. I don't want to assign any weightings. I want to assign the equal weightings to all of them. And then based on that equal assignment of weightings, the model is saying this basically is a speculative stock. It's 1.03% of the portfolio. And, that I think is fair because we're discounting it heavily. If it goes wrong, we're going to lose 1%. We won't cry about it. If it goes right, and 10x's, 100x's, you'll feel that, right? Because if it 10x's, for example, that all of a sudden is 10% of your portfolio, you'll definitely feel that. But then if it goes to zero, you won't really care. Well, you should care because money is money, but you know what I mean. So what we're looking at is something that is extraordinarily cheap. In a deep dive analysis video, we would probably look at to why, because things aren't normally so cheap for no reason. Well, actually, I'm saying it's cheap, but some of these growth rates are actually quite extraordinary. And will they continue that going forward? I don't know. But even if we're assuming half the growth, it still says, the model still says it's a decent buy at current levels. Okay. Again, I like to allow the numbers to speak for themselves. I have my reservations because of what the company is. And then I haven't seen the model before making this video. So this is a raw reaction. And I think based on that, It's interesting. I think if the extra legwork was done in terms of what the management team, did you find anything?
I did not find anything nefarious. He seems like
Okay.
a respectable guy. Yeah.
Okay. So then it would be interesting then. So a lot more research has to be done on that front. But
I
then
found a few
it could be.
lawsuits, but they looked frivolous to me.
I
Basically, it
saw
was,
them mention it in their 10K, so it's good. It's
Yeah.
all in there.
Yeah.
What do you think about this business?
It's not really entirely a business that interests me. It's not going to make its way into my portfolio anytime soon. If you're interested or not interested, if you're invested in this business, then best of luck to you. And that's kind of my thing.
I'll say this actually. At earlier prices, let's go back to the stock price. At these prices, oh, definitely not. No. The model would have spat on this, right? The model is now telling us now after the 80% decline, things are starting to get interesting. If you really wanted to get involved in this kind of business, if you did,
yeah, there's too much macroeconomic risk for me here.
Yes, that is precisely what you're not considering. So that's where I'm leaning as to why it looks so cheap. It is looking really cheap because of that macroeconomic risk. So if you're an American investor and you're not taking that into account, you might get blindsided by, virtue of a slap in the face by the currency devaluation or the inflation occurring in Brazil. And then your investment could not turn out so well, right? Despite it being so cheap. So it's probably cheap for that reason. I do think Brazil's political system is more fragile, less stable. If certain things occur in the next 4 to 5 years, this could or could not be, may or may not be a good investment. And I'm leaning more on the negative sentiment, in my personal opinion. I could be completely wrong. Personally, I gotta be honest, I don't follow Brazilian politics too much. I might delegate that to you, Austin, to follow it a little bit more. I mean, I follow it only by proxy. My wife, she talks to me about it here and there.
Yeah, I'm personally interested in world politics and world
you would
economies,
need to look at the specific policies implemented by each administration, which can be very drastically different. But for example, if Lula wins, he's going to implement different policies that are potentially going to be more inflationary, less good for businesses such as Stone Co. And that would not be good for you as the foreign investor. So that being said, I think that's why the market's kind of presenting you this cheap company, seemingly cheap, not so cheap when you really think about it. But it, clearly the numbers are cheap. And then we've experienced this before. Like, for example, the Chinese VIEs, they look really cheap. But there's more nuance to it. All right. And then just like this looks really cheap. There's more nuance to it. All right. So I hope we provided value in that case of actually talking about something. So, to summarize everything, numbers look good. Risks mainly lie in the currency, political, etc. Management, we didn't find anything. But again, for any foreign investment in countries that aren't as developed, or any country, actually, scratch that, any country that you don't personally live in, you got to be more careful. You got to do more research than the norm. And again, you got to understand that in Europe, Canada, United States, Australia, all these other developed countries, you're in a system where the business ethics are a little bit better. So yeah, that's pretty much all I have to say.
All right. Well, with that being said, we are your hosts, Austin and Fabio. This is the Capital Mindset Show. If you've enjoyed what you've seen here today, please be sure to share the video. Really, really helps out the channel. Please be sure to visit our Twitter and Instagram at capital_mindset, and visit our website at capitalmindset.org. And yes,
we got like 670 more requests to go.
70 more requests to go. We're getting them all done.
We're getting them all done.
We'll see you guys later. Take care.